So this is really getting beyond ridiculous. As of the time of this recording, Chinese ADRs are up across the board between 5 to 10%. So investors are naturally frantically asking, what's the catalyst, or what did Chairman Xi say this time around? So the rally is purely based on an unconfirmed social post of a plausible reopening of China. Yes, you have heard it right. It's based on a rumor. What a time to be alive. So as much as I don't wish to acknowledge, Chinese equities today in the stock market is pretty much operating like a casino, at least for people that are playing or punting for the short term. So it's even more volatile than cryptocurrency. Stock movements are purely attributable to rumors, macro conditions, or based on people's hearsay. So close to zero emphasis is being placed on the company itself. So at the end of the day, don't forget that whenever you are buying or purchasing a particular equity position, you are owning a piece of a business. And this is just a public service announcement for my fellow long-term shareholders. So I've came across this tweet that had me laughing for a good 3 minutes. So Chinese stock investors in 2015 were studying Buffett and Munger because the issues were with fundamentals. For those of you who are not aware or wasn't keeping track, there was a popping of the stock market bubble in 2015 as they released draft regulations pertaining to shadow finance margin accounts. So the Shanghai index was down 50% from 2015 to 2019, and the Shenzhen index was down around 60% in the same time period. So that was clearly a problem around fundamentals. In 2020, however, Chinese investors are reading about economics because the issue is around macro conditions, and most actually turn into epidemiologists overnight. So in 2022, however, we all started reading about history because nothing makes sense anymore. And I totally agree. So what do you think? So the only thing that actually makes sense in today's world is when you smash that like button. I'll be 100% happy. So please make my day better. This is crazy. Weibo just extended their latest sign-up reward and it has never been better. So you can get up to $150 cash voucher if you fund and trade your Weibo account today. So all you have to do is to sign up for a new account with the link below and deposit at least 2,000 Singapore dollars and execute one buy trade for a stock or ETF and one option. And that's a whooping 10.5% ROI on your initial capital. So for those of you who have been sitting on the sidelines for some time now, I think this is the sign to get yourself motivated. So Weibo prides itself on zero commission trading. So let's stop paying commissions and use them to buy more Alibaba. So if you need another reason to sign up for Weibo today, they are also giving out attractive referral rewards if you get your friends to sign up using your own referral code. But of course, you should do so with mine first. Wink wink. Don't let this 10.5% ROI slip away so easily. Link will be in the description. Thank you Weibo for sponsoring this video. Now, one thing for sure though, in order for there to be so much volatility in the Chinese markets today, there has to be a huge amount of fund flows going in and out of these stocks. So if it's a dead fish, it's not going to move. So it does kind of reflects that there are plenty of money sitting on the sidelines waiting for the uncertainty looming over China to start clearing before investors take a more definitive position on whether they are long or short China. So on top of this surge in stock prices, the renminbi also strengthened as everyone seems to be extremely excited about the ending of their pandemic control policies. The cute thing is, Zhao Lijian, who is the Chinese Foreign Ministry spokesman, said that he was not aware of the government committee to assess ways to exit COVID-0, pouring cold water on overzealous investors on the side. But it doesn't seem like the market cares anyway. So my personal stance is, we know that China is going to open up sooner or later. Whether is it in 6 months, a year, 5 years, or even 10. It's not a sustainable strategy in the long run. So I know many people are trying to punt for that particular inflection point around Chinese equities. And the end of COVID-0 might just be it. I am too dumb to make such grand predictions. So I'll just buy as long as I deem it to fit my criteria as an investment. And if I'm comfortable with the valuations, of course. So on that same note, it does seem like I'm not the only one in this mission. So mainland China funds seems to also share my optimism, as they've bought back around 7.4 billion Hong Kong dollars worth of Hong Kong listed stocks on Tuesday, the most since June, adding to the 28.1 billion Hong Kong dollars of net purchases just last week alone. That said, to not just feed you guys with hopium, it is also true that foreign investors and foreign funds have been fleeing for the exit as well, which resulted in the abysmal performance in all these Hong Kong listed stocks. And that is also why it's up to you to decide on which side of the trade do you wish to take. So mainland funds actually bought Tencent, Meituan, Wuxi, CNOOC, China Mobile, and Koolearn Technologies. And these are the 5 most traded stocks in the southbound channel. So this data is particularly interesting, isn't it? Nobody seems to be touching the quote-unquote popular stocks in the Western Hemisphere like your Alibaba, JD, Neo, Xpeng, Pinduoduo, etc. I think this is a food for thought for all of us. Why is there this disparity in interest amongst the universe of all the listed Chinese companies in the Hong Kong exchange? Of course, I'm not saying that all is fine and well in China today. So there are still a multitude of different news of different snap lockdowns after new cases prompted Chinese authorities to shut down casinos in Macau, the Disneyland resort in Shanghai, and workers from Foxconn's iPhone assembly plant actually flee from the factory itself. So none of these news appears optimistic for China. But I guess, given the forward-looking nature of the market, we should have a consensus of how these companies will perform soon as the financial year draws to an end. So all else being said, I think we should still stay skeptical of any news that comes out from China. And unless it's the official reporting from official government authorities, I will take the rest of them with a pinch of salt. So I'm probably not going to act based on market rumors. And besides, for those of you who have been religious in consuming my content, you would know that I've already added some time back. So would these be the bottom of Chinese stocks? I don't know. One thing I know is that I'm fairly comfortable with my position and exposure today. So would I regret not buying more if they rally from here on and these truly marks the bottom of Chinese equities? Of course I would. Any sane human being would regret. That said, would I be bummed if it continues dropping further from here? Not really. So for those of you who have been constantly hounding me on whether I think the bottom is in, whatever I'm going to say will just be my own pure speculation. So it might trade even lower than its previous bottom of $58. But I do think that we are kind of at the end of the capitulation phase. On Monday, after the party congress itself, the sentiments were just rock bottom and clearly spectacular, which was why I bought another tranche of Alibaba just last Monday. Not financial advice, but you do what you seem fit. With that, I'll see you in the next video, but more importantly, I will see you on the moon. Goodbye!